Hello everyone, my name is Theo. I am a certified financial technical analyst, and today I will walk you through the technical charts and explain you all the major levels and how we can take advantage of the price. Starting with the Bitcoin, this is the 4-hour time frame. We can see the all-time high there. The price now is fluctuating around the recent swing high. If we drop a lower time frame, let's say the hourly chart shows that the market now it wants to perhaps break above this high, still 45 minutes until the completion of this candle. If we're going to see a reversal price action on the hourly, maybe we can hit a bit lower to test the $120,400, perhaps to fill up this fair value area. The lower the time frame, the more detail you can see, the more uptrending market you can spot. So more bullish than bearish overall on the Bitcoin. Next one I would like to see is the gold. I know many of you are trading the gold market, and if you see the overall picture, guys, the higher time frame, the gold, it's in a really consolidation, trendless environment. We don't see consistency between the bullish and bearish candles, as well as there is no consistency between the swing highs and swing lows. Currently, the price is how we call it in the middle of no man's land in the overall long-term picture. If we drop a lower time frame like the 4-hour chart, we can see that the market created this kind of short-term, near-term uptrend. The reason I'm saying it created the near-term uptrend is because I'm using a very profound information from technical analysts. We have this swing low that after the new higher high form, we call it as the failure swing low. Why? Because the price, as was trending downwards, it failed to create a lower low here, and it moved away from that area, creating a new higher high and a new market structure. It left also behind this long bullish candle, we call it bullish Marabozu, and somewhere in the middle of the bullish Marabozu, we can find the buyers very active. Also, as the middle of the bullish Marabozu right here coexist with the broken swing high, this neckline, this can become a very, very solid area of support if the price drops further. But based on what happened with this long leg doji candle, we see the market created a bottom right here. Now, this is one of the, I can say, complicated charts this week, because the price, as was moving upwards, creating a series of higher highs and higher lows. At this point here, it created a lower low. And we can understand that the sellers, they were extremely strong from this point down to that point. So if we're going to see somewhere around $3,380 reversal price action, which is the middle, and it coexists with some Fibonacci retracements. Let me show you. So from this high down to this low, the 50%, it's here, the 61.8% golden Fibonacci ratio, it's right up there. And this coexists with all these lows. So we might going to see some reversal opportunities at this moment. If the price continues further up and makes a new high, higher than this one, then definitely the next target is going to be that one there. If the price drops below this low, then we're going to hit all the way down to these swing lows here. Next one on the list, let's check the Nasdaq. Nasdaq hit it a new all-time high. That's the hourly time frame. If we go on the 4-hour chart, the price since yesterday exploded. Now, after a new all-time high made it, the price is trying to create a retracement. We need to see some kind of retracement. This move is not healthy for the market just as a straight line. The price might want to come anywhere between the 61.8 and 50% Fibonacci. And as you can see, it coincides perfectly, let me show you, perfectly with this fair value price here from this low to that high. And it's also in the middle of this swing high, broken resistance. It can turn into support. It's the change of polarity, as we call it in the markets, when support turns into resistance and vice versa. Let's keep an eye on that one. It might going to be promising. Now, just at this point, to let you know, the analysis I do on this 4-hour hourly time frame, you can use it as your map. And if you want to execute on lower time frames, you can keep the overall bias from the higher time frame. Euro against the US dollar. This is another interesting chart because the market is now at a critical level of resistance. All this inside candlestick here, among with those two highs on the daily chart, they can create some barriers on the lower time frame. We saw that for the previously 4-hour candlestick formed as a bearish candle with a little bit, not very noticeable, but just a little bit long upper tail. It has bearish implications, but we want to see some follow through. If we don't see a follow through, then there is no point on this one. If the price now close, this 4-hourly candle close above the high of the previous 4-hourly candle, then we might going to see further continuation. And next area, we're going to look for some price reaction. It's going to be the highs around there. On the other side, let's just go to the hourly chart. If the price drops further below, and in my experience, if it breaks below this intraday lows, we're going to see the next move all the way down here at the bottom, around 1.16. Now, there is something that I saw earlier, and I would like to show you. The move from here to there, the new impulsive trend leg, came right exactly at the 61.8 Fibonacci, and the price bounced it off and moved upwards. On the lower time frame, you can see it like this. When you see that the price finds at a critical level of support of a higher time frame, and if you drop down to lower time frames and you see some solid long bullish candles, you might expect that the price is going to create the reversal of the lower time frame, which is going to bring us back and align with the higher time frame trend continuation. Next one, let's check the USD against the Japanese yen. This is another mixed market. The price from this low appeared to that high. Now it went about 90%. It retraced the move, and it's hovering around these areas. From the technical point of view, guys, if this support will break, we're going to see the price to hitting a bit further down, and this is how it looks on the hourly time frame. We have, let's say, a fair amount of room here, about 42 pips. If you do day trading or scalping, it's a long distance. On the other hand, if the price bounces off this support and it breaks above this high, then the next area of resistance is going to be right here. I don't know if we're going to see this until Friday, but if not, then we're going to be here again next week, and I will review the charts. Next one, we will check the sterling. Then we have the Aussie, and we're going to end with the US oil. Sterling. The Bank of England reported they cut interest rates, but surprisingly, the sterling rally. We should have seen the opposite. What's the case with this one? The price now on the daily approaches this area of resistance. On the 4-hour chart, a strong uptrend is it's on the go. What it's attractive, perhaps it's the fact that, let me point it out. Let's use this one. The price at this point, it created a straight impulsive trend leg. When you come across with these inside candles, you don't consider this as another swing high in the market. It's just a straight upward move. So essentially what this market did, started from here. It created a nice higher high formation, higher low. So the price now is in an uptrend. It's a clearly buyer's market, but every uptrend proceeds by retracements. Now, if you are still long on this one, the next area of resistance is up here. Then we have this congestion, as I like to call them. There are resistance levels, the one next to each other in a very close distance. It's not like this area here with that one up here. Okay, so we have to accept that sometimes it's not the best market conditions we want, but if we see a kind of rejection here and the pullback or retracement, that might going to favor some buying opportunities. And did we check the Australian dollar? No. Australian dollar. When they cut interest rates in Australia, yesterday on Tuesday, the price dropped, and that was normal. Now, what's the case with this one? On the 4-hour chart, the price reached let's say, a good level of resistance, this low, that high now. If we're going to see a continuation and this bearish candle won't follow through to the downside, then the next area of resistance is up here, and a break above, it's going to lead us to this area. On the other hand, if the price follows through this bearish candle, and it can do it. So far, we see an inside candle. Then the next 35 minutes, if we see another inside candle here, I believe, or based on how the market usually behaves, we might going to see further downward move. Okay, so in that case, the next area of support, it can't be this one there. So this is the biases for the Australian dollar. It can go either way, but fair weakness here. Maybe it's going to favor this side. And we're going to finish with the US oil, very promising market on the daily time frame. The price, it's in a strong downtrend right here. Now we are hovering around a 4-hour support. We see the pattern called descending triangle. It's a continuation pattern. Bearish, it has bearish implications, but right here, I'm not going to rush to sell the breakout. If the price breaks below these lows here, then on the lower time frames, we're going to see some continuation, and perhaps the retest of the broken support can turn into resistance, and we can find some good opportunities to sell the markets. Regarding the news events, yesterday, the Reserve Bank of Australia, as I said, cut interest rates from 3.85% to 3.60%. Also, the consumer price index in the US reported as 2.7%. They were looking for an increase, but it didn't happen. Today, Wednesday, only the wage price index in Australia reported. It's not a significant event that highly impact the Australian dollar, but our focus, it will be tomorrow on the Aussie with the unemployment rate. And if the unemployment rate drops, and it means less people, they receive government benefit, and if at the same time the market follows through, we're going to see strong Australian dollar, at least against the US dollar, because the US dollar, as per the week CPI, it might going to get affected by some bullishness on the news of the Australian dollar. On the other hand, if the unemployment rate reports negative, and again, we need to see the Australian dollar following through the negative events, we're going to pair it with the interest rates cut, and we're going to see a lot of weakness on the Australian dollar. Next event is going to be during the next event is going to be during the London trading session, and it's going to be the gross domestic products in the UK, the monthly report, and it sees that from minus 0.1%, it can increase to plus 0.2%. This can have good bullish impact for the sterling, and we might going to see a further move to the upside. So the level we saw as potential resistance, if it's going to break, if the price breaks through that level, we might going to see the next area of resistance being the target. And during the New York trading session, the PPI for the month, it's expected to increase by 0.2%. Again, the US dollar will react, and we will see how the market will position at that point, because we have a couple of major news events around here. On Friday, in Eurozone, major banks will be closed. During the US session, the retail sales are about to report, and the forecast shows to keep the same at 0.6%. It's not an event, guys. It's going to massively impact the US dollar, but what you need to be aware, and also this one here, or what you need to be aware is that, especially on Friday, we will lack the liquidity in the markets. Okay, so be careful with that one. Maybe we're going to see some spikes on the US dollar right at the open. Maybe you can let the market sit a little bit, and then you can create your bias based on the outcome and also the technical analysis we just did.